Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, and special reports the moment they're hot off the press, well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. Hey, everybody, Tom Gentile. Welcome to Patterns and Profits, Monday, August 17th. And it is just after 12 o'clock. Glad to have you guys hanging out with me here for another Monday together. Another Monday where we do our weekly market update. Another Monday where we do Money Calendar Monday. But this one Monday, I'm also going to talk a little bit about the yellow shift based on a live webinar I did last week. Not everybody was able to attend it. I'm going to do a little bit of a recap on that as well. Hey, you know what helps me out here, guys? For those of you that want to help me out, you can do so by liking and subscribing to the channel here and hitting that notification bell if you want all the videos when they are uploaded. All right. Last thing I want to mention before we begin, this is investment advice. Past performance is not indicative of future results. Now, before I get started today, all right, I want to talk about something that we are deadlining. All right. Deadlining means that this is over after today. And that is something that I call Money Calendar Pro Plus. All right. Money Calendar Pro Plus, for those of you that missed this, this is a really great package on its own, but I've sweetened the pot for new subscribers only. Let me just tell you in a gist of what I'm talking about. So this is our Money Calendar Pro Plus, which includes my scans, the scanning software that we use and that I use to pick seasonal trades. I also do a regular weekly session of hand-picked option trades, and this is our Money Calendar Alert service. This is included. Weekly video updates are included. Real-time entry, real-time exits, any adjustments that are needed also included. But we're also adding in, I call it the Yellow Shift Survival Kit. All right, so what's the Yellow Shift Survival Kit? I'm actually going to get into what the Yellow Shift is a little bit later on in the program, but it comes with 2 special reports and 5 additional seasonal patterns to get you started immediately for those of you that are brand new to this style of trading. All right. Once again, I call this our Money Calendar Pro Plus. And if you check out the QR code that's up there beside me, or you can check the comment section out, you'll be able to see the link that ends today. All right. This is a very special price for those of you who've never tried us before. This is everything. It's all packaged. It's an entire seasonal package, goes together, but it ends today. All right. So that being said, let's get to the program. So I wanted to start off our weekly update together, right? Talking about the 3 engines that are driving the markets right now. So, you know, I take a look around, I look behind me, we got a little, a lot of mixed signals on the screen right now, but there's some stuff that I believe is going to continue to drive this market to higher highs. We're in the dog days of summer right now. All right. Last couple of weeks of August, what's going on? We got some retail coming out. I think Home Depot, Lowe's, the home improvement centers are going to be reporting this week. We got some other retail juggernauts that are reporting as well. And I'm going to talk about earnings a little bit in just a moment. But really, the big 3 engines that are driving the markets higher right now: AI, and more importantly, AI infrastructure. So spending, or that spending on the AI infrastructure, still the primary driver of the markets. So if you take a look at what Morgan Stanley's reported, they're seeing that, and they're basically coming out and saying that the rally is being powered by the AI boom. I think that's part of it. I think a lot of that's already baked in. But earnings breadth is also something that's pushing this market higher too. Profits have been stronger than normal. Do you think that one might have something to do with the other? All right. We're seeing on the surface You look around, you're seeing layoffs that are happening everywhere, and they're being sprinkled in. You're not seeing massive layoffs happening all at one time. I think what's happening is that companies out there are pulling off people out of the workplace at a small and sustainable move. That means you're going to see more and more of this happening as we rotate out of a lot of human activities and rotate into AI activities, right? This is nothing different than what we saw decades ago when we ushered in the computer era and when we ushered in the internet. And as we usher in new technology, we see this rotation. This rotation is continuing to happen. But here's the part that you might not know. A lot of the gains right now are not so much tech driven, but they're concentrated in energy and also communication services. Now think about energy and think about communication. Energy services, believe it or not, are also AI driven. Communication services are massive AI driven. So even though you might not see it on the front side of these earnings, beneath the surface, that's what's happening. Okay. We're also seeing sector rotation that's happening right now. So sector rotation means that although you might see AI and tech not making the huge advancements that it did earlier this year, as some of the AI and tech services are dropping, what's taken their place? Energy has taken place, right? We've seen the energy markets moving higher, although a lot of that has been driven by what's been going on overseas. We're also seeing healthcare. We're also seeing materials. We're also seeing financials. Financials finally getting the shot in the arm it needed to outperform the S&P 500. So these are the three engines that I see driving the markets right now. All right. AI, of course, earnings, and sector rotation. All right. Now let's talk a little bit more about earnings, and let me highlight a couple things that are going on in the earnings markets. I talked about this a little bit last week, but I really want to key in on these big factors. Number one, 86%. What is that? That's the percentage of the S&P 500 companies that have beat their earnings per share estimates compared with the 5-year average of 78%. That's huge. You think about 78% and then you think of 86%. Look at the difference between those two numbers. That's a better than double-digit gain off the 5-year average, okay? Next, 76% beat revenue estimates, okay? Now, to me, revenue is important, but it's not important as earnings per share. Next, 15%. 15% is the number of revenue growth that came in year over year, the highest since 2021, Q4 2021. Think back to 2021 for a moment, okay? What happened? The year before that, we had COVID. We had money getting flushed into the markets in 2021. So you had 2021, which was a really high holiday season, all right? We were coming into Q4. A lot of spending, money was flushed in, interest rates. Remember, we weren't even thinking about raising rates at the time. So to look at where we are now and to see the revenue growth we've had, that's now the highest since Q1 of 2024, that's huge. All right, that's huge. And the number 4, all 11 sectors I track reported year over year earnings growth. Again, is it really sales driven? No. Sales are there. The revenue, we're beating revenue estimates, but we're beating them slightly. What's happening is companies are getting more and more efficient, and we're seeing that in the underlying numbers that are coming out. All right. So how does this all relate to seasonality? When I look at seasonality and I look at I look at stocks are painting a very interesting picture as we go into the back half of August and into September. But when you look at ETFs, we're going in at 73% bullish and we're going out at 78% bullish. But I want to let you know something. This does not tell you the full picture. When you see bullishness in the market, and UUP happens to be one of those numbers, those ETFs that are bullish, that's pushing against the stock market. That's pushing against commodities. And when you see what I'm seeing this week, UUP is still here. UUP has been around now and been hanging around for quite some time. US dollar. Look at it again. When you see, when I see 13 total trades, 13 total positions, that means there's 13 days here and there where we're seeing bullishness. It doesn't mean if you miss UUP today, it's over. It's saying going backwards and forwards. There's a lot of clumping going on in the month of August. We're going from August to November, from August to the end of October, from August to the beginning of November, that the US dollar rallies. Okay. Could it be because we're going into midterms? Not necessarily. Midterms only happen when? Once every 4 years. This has historically happened every single year for the last 10 years, where the US dollar has gone higher between now and end of October, beginning of November. Okay, so I want you to keep an eye on that. We talked about it last week. We talked about it 2 weeks ago. What have we not talked about? We haven't talked about FXE. Let's talk about FXE for a moment. So FXE is the red line you see here. All right, some overall details of FXE. It too has positions that are between now and going out to the beginning of November. It too is a 56-day historical trading opportunity, right? It too has a small return, okay, to the downside. The red means that this FXE is historically bearish. What is FXE? And it too also has a positive power meter. And it too has happened 10 of the last 10 years. It's actually gone lower. FXE is the financial currency shares euro dollar. Okay. So the currency shares euro dollar ETF, if it's going lower against what? Against the US dollar, which is going higher. It's confirming what we've been talking about a couple weeks ago. If the US dollar is going higher, it's going higher against a basket of foreign currencies, one of them being the euro. So the euro is showing the last 10 years that it has averaged about 1.35, almost 1.35% between now and the end of October to the beginning of November. But look at the pattern that it's had in the last 10 years. Yes, these are low numbers you see, 1.29, 3.28, 1.69. But this right here, folks, is the euro dollar. It is a way of trading the euro. It's a way of trading the euro in a form of what's called currency shares, which means you could trade it in your equity account, right? And so now that I know this, and I'm looking at this, historically bearish between now to November, absolutely. You know what else is happening? The pattern's getting better. In fact, the last 5 years, the pattern has done so much better than the first 5 years. It's practically doubled its move just in the last 5 years. Now, you might say, but Tom, 1.35% on average isn't much. In fact, when you look at the power meter, you could factor in that it might move 2%. That's not much, but that's a lot when it comes to the power of the currency itself. A 2% move is huge, right? So it's happened 10 years in a row, just like the US dollar has been happening 10 years in a row. This is one that you trade to the downside. Let's take a look at the chart. The chart agrees that not only does the seasonality they're showing and the technicals are showing, but I put something else on the screen for everybody to see too. This is the Elliott wave forecast for FXE, all right, currency share euros. And you can see that we're in a wave pattern that's going to the downside. The last big down move was from May into the end of June, where we saw the euro move, this ETF go from just below 109 down to around close to 104. We have since then rallied to near 107, right? Elliott wave has us going down to below 104 to 103. And it's showing that can happen by mid-October, which comes in just a couple weeks earlier than what we see with the pattern that ends end of October to beginning of November. So I wanted to pair all of this up with you and show you seasonally what's going on with the euro and foreign currencies as a whole. And more importantly, that it's pairing up with other indicators right now, moving in the same direction. Spot the opportunity, okay? So in a summary, August is leading higher, all right, for interest rates in the US dollar. That's the seasonal aspect. Can the US dollar and can interest rates and the stock market all move in the same direction? Yes, they can. We've seen it happen. Does it last forever? No. Eventually, the rails come off of one or the other. Keep that in mind. But when we do see higher rates and we do see higher US dollar, that means we see the opposite for foreign currencies like FXE, okay? And then finally, we've got interest rates that are lower than average, or IV rate, excuse me, lower than average. IV, what is IV? IV is implied volatility. So when you look at the options are fairly priced. And it suggests that for those of you option traders, you might want to look at puts as the option play for FXE going into November. All right, going into November. So I'm going to take a quick break. When I get back, I want to talk about the shift in seasonality in a little bit more detail, what I'm doing about it, as well as the fantastic offer that I showed you at the beginning of the show that's going to be ending today. So hang tight, folks, and I'll be right back. Welcome to Patterns and Profits. I'm Tom Gentile, America's #1 pattern trader. If you've ever felt caught in the emotional chaos of market headlines, trading opinions, and meme-driven hype, well, you're in the right place. Here, we trade patterns, not panic, with a focus on profits, not predictions. Here's just one of my repeatable strategies I've used for over 10 years now. It's a seasonal calendar looking at the best days to buy and sell the world's most popular stocks. I have millions of data points over decades of stock prices showing me specific stocks that have a 90% or better historical probability of profit. Adding options on top of these patterns, and you can supercharge your potential returns. And with this kind of data, pattern trading isn't about predictions. It's about probabilities. And when you follow historical seasonal patterns like me, the market becomes much easier to navigate. Subscribe here for tons of videos on high probability stock patterns. And if you want more, scan the QR code above or click the links below and get my daily newsletter. Welcome aboard. I look forward to working with you. All right, welcome back to the last stream. Tom here, America's #1 pattern trader. You guys know what we do here. I show you and try to teach you how to discover patterns that repeat and profits that add up. All right, like, share, subscribe, hit the notification bell if you want all these videos. And of course, one more thing, I've mentioned it before, I'll mention it again. This is not investment advice. Past performance is indicative of future results. All right. So how many of you out there got a chance to be part of the special presentation I did late last week, I believe it was Thursday, where I talked about the August pattern turning yellow, right? How many of you were part of that? Because I want to do a little recap for those of you that missed that. And I also, I'm not going to go through the whole thing. If you want to check out the entire video in its entirety, then again, YouTube page is where you want to go, and we've got it out there. You'll be able to see that, or check your inbox because we sent recordings of that out. But I do want to focus on one of those three patterns and what's happening to it right now. So I want to start off with you with this chart here. We have this tale of two charts because this is what really started it all. I'm looking at the S&P. I'm looking at it making new all-time highs. I'm also looking at that daily volume tailing off a bit, and I'm seeing options IV making new lows. And I suggested we were looking at this chart that this is all normal, okay? It's normal to see new highs during the summer. It's normal to see the dog days of summer tailing off in volume. It's also normal to see options implied volatilities hitting new lows as we go towards Labor Day. That is all normal. You know what else is normal? Getting ready for what happens afterwards. All right. And so that's what August is really telling us. Now, what we don't typically see normal is the US dollar basically near its year-to-date highs. You know, last time US dollar was above 29, you got to go back to last year. And then before that, it was COVID. And yet here we are, you know, just coming off 28.5 just a couple weeks ago. So the next pivot has us, if we move higher, getting back to that 29 number. And again, yes, we could see new all-time highs in the S&P. We could see new yearly highs in the dollar. We're kind of seeing it as it speaks. But eventually, one of these has to decouple. They both can't keep going up lock and step forever. It just doesn't happen in a market. So that turns me to the calendar. What's going on the calendar? Now, when I look at a calendar of ETFs, I might see one thing. When I look at a calendar of all of the most popular stocks, the only way it gets on this calendar is it's got to have 9 of the last 10 years having patterns that move in the same direction, either bullish or bearish. If it's 8 of the last 10 years, if it's 7, 6, 5, it's not on the calendar. So when I'm looking at, we take thousands of stocks, we drill them down to the top, a little less than 400, 355, I think is the number we're working at right now. When I see 70 of them, all right, or 100 of them that are on here, that means that, so if I have 400 stocks that I'm tracking and 100 of them are on this, that means 25% of the stocks are doing the same thing over and over again at this time of the year. The thing is that when I see the counter turning yellow, that means roughly half the stocks are going one way and half are going the other. So again, when I look at this, it tells me that I need to be a little more careful about what I'm picking, because everything's not running with this all-time high that you're seeing in the markets. And so we have a pattern. We have 3 patterns that are standing out right now, and that is in the bond market, in uranium, and in metals. I'm only going to speak about the bond market for our live stream today. Again, like I said, if you want to see the full session, check out the full session. I did that last week, and the best place to go to get that is the recording that was sent to you by email. But let's talk about bonds. Let's talk about bonds right now and what's going on in the bond market. So this is a pattern that started about 10 days ago, 2 weeks ago. I'm still seeing it showing up in the calendar today. And so historically bearish between now and the end of October. Now, for TLT to be historically bearish, what has to happen to interest rates? Well, they have to be historically bullish between now and October 29th. And it doesn't have to be a big move either, okay? It doesn't have to be some super huge move. This is not AI I'm talking about. This is not, a Mag 7 stock. This is the bond market, right? So some of the smallest moves happen in cash and happen in bonds. But those small moves can be big deals when it comes to either stocks that track with them or, and more importantly, the complete opposite of them. Or if you're going to look at these individuals like TLT or UUP or, a currency or a debt instrument like bonds, then if you want something that moves more than a few percentage points, you trade the options. You trade the underlying, the options on the underlying. So 9 of the last 10 years, what we've seen is we've seen the bond market move lower and move lower by a great deal. In fact, there's a good 5% move on average during this time frame. 2022, we saw a 17% move. That was big, but you also remember in 2022, what were we doing? we were no longer not thinking about raising rates. We were actually thinking about raising rates. We're raising rates and thinking about raising them more. And that's what caused that big move. So putting this all together, and I look at the chart of TLT, and at the time we were at 82.61. Anytime that I'm following something as a repeatable rules-based pattern trader, right, I spot the opportunity, create the trade, plan, execute, manage the trade. That's the whole premise behind a rules-based trader, all right? Not a day trader, not a meme trader, but I'm a rules-based pattern trader. And the pattern we're looking at right now is the pattern of seasonality. But you could look at this and say, well, this looks like a technical downside pattern too, but isn't it on the upswing now? It appears to be that way. But when you spot, create, plan, the spot part I'm looking at isn't based on what the chart might do tomorrow or might do in a week. No, it's what it has done year over year over year, looking at that particular pattern. And we know that moves down. Next thing I start doing is I start looking for option trades. And the 83 put options are what we were looking at just Thursday night. Now, what's happened between Thursday night and today? Well, these put options have gone up in value. And that's because TLT has moved down, right? So what we were looking at that was anywhere from $2 to $2.20. It was hitting 244 to 246 just before I went live. Where are they at right now? Have they changed since then? Let's see if I got a feed on that. I'm going to update this real quick. Let's see if I can do a quick update. Bring that back. See if it populates. Okay, here's the chart. So yeah, so we've seen a bit of a move since even since this morning. We're down to 81.64. All right, let's look at those options. So 81.64 on the price. All right, now I'm looking at put options, and I was looking at put options for November. So I'm going to pop on down, look at the put options for November. There they are. Where are those 83s? Well, the 83s are now 265 by 267. All right. So moving in our direction. They're up, I think, about 20% since we did this last week. So you can see here, step 2 is create that alternative risk strategy. An alternative risk strategy with buying puts is you pay no more than the put price. We are looking for that pattern to move down. If stock moves down, the put goes up, right? And finally, I'm looking at a risk graph. I'm trying to visualize this before I look at the trade, before I place the trade. So I know that looking at it this morning, we were looking at about $2.45 risk. That means your break even, if you're buying the 83s, is 83 minus 245, 80.55. That's the November 20th break even, not today's break even. Right? But then I look at targets too, which is what's my target by expiration? If I'm looking for a 50% target, I need it to go to 79.30. If I'm looking for a 100% target, I'm needing it to go to 78.10. Right? In any event, what we're doing is we're simply going through and doing the same three-legged stool approach that I've been doing since I started teaching. Right, since I started teaching and really even started this channel and live streams. Spot your rules-based opportunity, whatever that is. Create your alternative trading strategy. And obviously that's what we're doing now. And then it's just a matter of taking your broker and planning, executing, and managing that position. Right. And so the other thing that I mentioned as we get to the end of our program today is Money Counter Pro Plus. Now, I'll say it right now. If you click on the widget that's above me, or if you take a look in the comment section, you'll see the link. I added it to the comment section. You can see what Money Counter Pro Plus, what the offer is. But I can tell you right now that the package is the scan patterns. Exactly what I do here week in and week out. You have the ability to utilize that and get all of that research and all of that data at your fingertips. So you can see these 90% historical patterns every single day, right? You can go beyond the calendar. You can filter the results. You can study. I have 10 years of data here, but you can see 20 years of data on these stocks if you want and compare profit and accuracy. We also publish a regular alert service where you get a look over my shoulder and my team and I as we send you what we see, all right? Weekly option trades, entry and exit instructions delivered in real time. And when I say real time, I mean it goes straight from my computer to yours. It just takes mere seconds. I also do weekly updates, weekly video updates. Every once in a while, I might miss a week if I'm traveling. But most of the time you get weekly updates, especially when we get into that week of expiration, like we're at this week. This is a really important week for me because the majority of my option positions, if they're going to expire, if we're getting close to that expiration, it's going to be the third week of the month, which we're in right now. Now, something I've added to this particular session in this particular package is something I call the Yellow Shift Survival Kit. So what this is this is 3 yellow shift patterns, right? Seasonal patterns, 10 of them in all. And then that's the 3 yellow shift patterns and also the 7 back to school stocks. I did a little session on back to school stocks not too long ago, a couple weeks ago, but I'm giving you 7 of my back to school stock patterns that's included. And this is what I call that seasonal survival kit. Okay. So you get the details on all the patterns. You get the details on the exact ETF start and end dates, especially for not just bonds, but uranium and metals. The back to school piece as well. This whole package we put together for is fantastic special price. It's a 1-year package we're offering. Typically, this is more than twice what you see here, but we're offering it to our new traders, and it ends today. This is a very quick offer. We were just doing it over the weekend, but we're extending it today. It's offered today, $997. You get the entire package for the entire year. This is a first-year price. After that, you'll be getting our members discount. So there you go, folks. That is the program for today. I wanted to share with you, and I did, our weekly market outlook. I want to talk about Money Calendar Monday and what's going on with the US dollar and what's going on with global currencies like FXE, and more importantly, give you an update on the August yellow shift. All right. Thanks again for joining me. Have a great rest of your day, and I'll see you here again next week. Bye now.